All right. Hi, everyone. So on our sport finance panel today, we have Sal Galatioto from Galatioto Sports Partners. We have Randy Vataha from GamePlan LLC. And moderating, we have Steve Horowitz from Inner Circle Sports. So if you guys can get started, please.
Thank you for that kind introduction. That was great. This is a treat for me to watch how Patrick has really grown this program. So thank you, Patrick, and good job. Also a treat for me is being on the panel with Sal and Sal and Randy. I have such respect for them, and
if
they've
you
gotten
want
a
her
chance.
to answer it, that's fine. But we talked about this before.
Okay, thanks. But seeing the deals that they have done, and it's really a treat to be on here. So first, I would just like to kind of give a little context to how they got here. So, Randy, I know from when you were playing in the NFL, probably going into sports finance was not top of your list. But do you mind just kind of giving a sense of what brought you to do what you do?
Sure. Do you have an hour? Well, I had the good fortune to play with a Heisman-winning quarterback at Stanford University, Jim Plunkett, who carried me through, and we ended up, I played in the NFL first 5 years with Plunkett with the New England Patriots, played another 6 years total with them, 1 year with the Green Bay Packers. And through that time, I was a wide receiver, in case I wasn't an offensive lineman. Through that time, I got very involved with the union, was on the executive committee, and ended up on collective bargaining negotiations really through till the middle 1994-95, which was the last collective bargaining agreement that really brought about free agency, and a salary cap in the NFL. And after leaving while in the NFL, I started a business. We built in New England the first big fitness clubs, sold those in 1981, and then started a team in the old USFL. If anybody here is old enough to remember the United States Football League, we owned the Boston Breakers. 1984, we played in Boston, 83, 84. Donald Trump bought a team that's already in existence, the New Jersey Generals. We moved our team to New Orleans to play in the Superdome. At the end of that year, the now president wanted to move the league to go play in the fall. We didn't really believe in trying to take on the NFL, so we sold our team. And then I ended up, through a close relationship with Bob Wolf, one of the initial sports attorneys in the country, representing professional athletes. We represented Larry Bird. I was the CEO of the company. Larry Bird, Joe Montana, Tommy Glavine. We did a lot of contracts for entertainers. Did all of Larry King when he was CNN, superstar. And then in 1993, a good friend of mine who was also a minority partner in the football team, local sports attorney, Bob Caparel, had the idea and said, all of my legal business now is really around business. It's very little legal business. And he said, I'm thinking, would it make sense to try to start a small boutique investment bank that only does sports? Because the big investment banks, they come in, they do a deal, they leave, and 2 or 3 years later, when one of their clients wants to get involved in sports, there's a new young guy in the office that they give the assignment. There's been no real continuity. They try to apply all the principles in traditional investment banking to sports teams, and those multiples and all of those formulas don't necessarily work. So we thought about it, and I went back to Bob Wolf, who was about to retire anyway, and said, hey, we're going to start a company. We called it GamePlan. And we're going to just focus totally on sports investments. So I have a somewhat unique, having played professional sports, negotiated from the union side for many years, negotiated as an owner in the league, negotiated from the standpoint of player contracts, and this seemed like a pretty good idea. So I think we were probably technically the first boutique investment bank. and it's been a great run, and I doubt if there'll be too many people follow that career path.
Sure. Sal, you did not play in the NFL.
No, I didn't play in the NFL. I did work at a Canada Dry bottling plant in Maspeth, Queens, loading trucks. I got into the business purely by luck. That's a story of my life. I'm one of the luckiest people you ever want to meet. So if you, I was working for a French bank called Société Générale. They were at the time one of the 10 largest banks in the world. I took over the East Coast region. I looked at the return on assets, return on equity was not great. And why was that? Well, who are our clients? Coca-Cola, United Technologies. Good luck with that. So I looked at around a dozen businesses. This was in the late 90s. And I looked at the competition, everything from mining and minerals to sports. And sports at the time was a mom and pop business. It just was. It was. These franchises didn't sell for a lot. Most of them lost money. The leading bank in that industry was a bank out of Providence, Rhode Island at the time called Fleet National Bank. And I looked at that and I said, if I'm not smarter than the people at Fleet, I should be working at McDonald's. So I decided to start a sports business, and within 18 months of starting the business, I met Dan Snyder. Dan wanted to buy the Washington Redskins. There was a debt limitation at the time. You could only secure a loan against an NFL franchise up to $100 million. Well, I went around the NFL rules. I didn't take the franchise as collateral. I took dividends and distributions coming out of the franchise. It was the first sports loan ever rated by the rating agencies, and we got a BBB rating, which is investment grade rating. And we were able to put $340 million on the team. So Dan had to raise a lot less equity than everybody else. The loan blew out the door. We got $780 million in commitments for it. And Dan won, and that facility put us on the map. We grew the business at SocGen. Then I moved my entire team to Lehman Brothers. And again, pure total luck. 3 years before Lehman Brothers blew themselves up, I left and formed GSP 14 years ago. And by the way, as an aside, after 12 months, because I left voluntarily, they forced me to sell all my restricted stock at $72 a share. 23 months later, it was worth $0. That was, again, pure luck, right? Who knew? And I've been in the business since. We're a lender in the business. We do about 70% of our business is buy-side, sell-side M&A. And we do a lot of dispute resolution. We do a ton of valuation work. So that's what we do. We do sports only.
Great. Do you want to just spend a minute kind of going through how sports finance has evolved as you've watched? I know Sal just touched on a couple of the points.
Well, I think the biggest thing, and Sal touched on it, is when we started in '94, full going. There wasn't any sophistication at all around the sports, and for the most part, the leagues were totally reactive to whatever happened. They had some rules, and some applied, some didn't, and over time, as more and more rules and regulations have come into being, you've formed salary caps. The leagues now have a much better idea of what the revenues are, almost complete understanding of every team's revenues, which back in 10, 15 years ago, Sal would tell you that the leagues half the time didn't have any idea what was going on in their own franchises. And so it's really evolved into a very sophisticated monitoring and regulation within the business. We've seen that. I think it's been part of, it's frustrating to an owner to have all these regulations, but it's dramatically elevated the value of the teams, because now you can really understand what's going on. When you go to do a transaction, the data's real now. It's not, made up. The biggest problem in the industry in some kind of funny ways is the teams are becoming so valuable. If you want to own one, a billionaire is kind of probably can't do it. You've got to have multi-billions and a lot of really good partners. And the other thing that's happened is because the debt limits, every league has them, and in the aggregate, nobody gets much more than about 350 million. I mean, I won't go through all the league, but about 350 is about as much as you could ever borrow using the franchise as security. But you now have franchises worth 10 times that. And so it's very hard. This is an equity-driven business. When you buy a sports team, private equity funds make all their money by leveraging everything. This is the exact opposite. It's appreciation, very little cash flow, in some cases, but for the most part, not.
Yeah. I mean, look, that's really true. Our loan book at its height was around $500 million. Now it's down to around 250. And it's because of all those limitations. And frankly, look, the pyramid of people that can buy these things is getting narrower and narrower, right? Think about this. You buy an NFL team, pick a number, $2.5 billion. You put $500 million in debt. You have to put 30% of the equity in yourself. Okay, that's hard enough to find somebody who can write that check. But now he's got to sell limited partnership stakes for the rest, which is even more difficult because you're writing, it used to be you'd write a $20 million check to be an LP. But now you're writing a $250 million check and you get nothing. What do you get? You get preferred parking and nice seats. Good luck with that. So that makes it very challenging. And I think one of the things that is going to have to be addressed in the coming years is how do you continue the upward movement in value if the number of people that can write those checks is not growing as fast as the value of the franchises? It's really tough.
Particularly since we're part of the Lacob School of Management, both of these gentlemen participated and helped on either side of the Lacob's purchase of the Warriors. Without going into too much detail on the price, do you want to just talk about what it was like to sell the team, Sal, and what it was like?
It was great. It was look, I had a great client who wanted to sell. I mean, I knew him for a long time. He gave me a price, said it had to be in the mid-4s. David Stern told me I was out of my mind. No one would ever pay that much for a basketball team. But Chris Cohan was a great guy. He delegated it to me. He gave me his proxy. He said, if you can hit this number. We had a really a difficult process. We had 10 bidders. We got down to the final 2. And to me, Joe wanted to buy the team more than anybody. That's important because, right down to the wire, when you have to make the decision and push the button and say yes, he would do it. I knew Randy and Bob for a long, long time. I really liked them a lot. I trusted them, and I trusted what they said to me. That made it really good. We had 2 really excellent law firms. I used Peter Zern at Covington and Burling, and you used Adam Klein, right?
Yeah, Kattenich
and I knew his lawyer as well. His lawyer was Jerry Reinsdorf's lawyer, and Jerry and I are very good friends. And what I told Chris was, we had 2 finalists. We were going to set a bidding date. Last and final, you came in the bid. You couldn't revise it after that. They had the winning bid. And I think it really worked out really well, I thought. I thought it did. But then the guy who lost was like cranky and cried and said he really won, and we took a lower bid. And it was chaos for a little while. But, when the buzzer goes off and you're down by a point, you can't wait 5 minutes and take a shot again, and it goes in and you win. The rules were set, and we live by the rules. So anyway, give you your perspective on the deal.
Did you know all along that you were going to win?
Of course.
Okay, good.
Some guy
No, you didn't know. Jesus, we were at the closing table when I got a call.
We're still
outta
going
here.
on midnight. First, I want to say, if any of you have a chance, you saw Kent here earlier, but the Lakeups are just great, great people. Joe was a client of ours 15 years before we bought the Warriors, and we looked at a number of sports teams with him. He is a very, very passionate basketball player, still plays now every Friday at Mapes Pavilion on the Stanford campus. Just a real, just loves the game. This was a classic transaction that took a lot of courage on his part from the standpoint that the highest price ever paid for an NBA team prior to this was Phoenix, right? Sal sold that team. It was $400 million. You had, and it was a very successful franchise, very good team. You had the Warriors, who had been to the playoffs one time in 16 or 17 years.
17 years.
Once in 17 years. Now, given that more than 50% of the teams go to the playoffs, it's almost statistically impossible for that to occur. It was just a dream that everybody said, Joe, you're out of your mind to pay over $300 or $350 for the Warriors. Terrible franchise. And I'll give you a good lesson at the end, but we went in and, Sal did a great job, and we've known him a long time, trust him for, always being straight with us. And when we got to our final bid of $450, and, that's $450 million, 2010, that's a lot of money. And it was a real gulp and took an amazing amount of courage. And every one of Joe's friends thought he was crazy, except for his partner, Peter Guber, who we had introduced them to each other, a Hollywood director, and they did it. And it was amazing. I mean, the number of calls we got from the press saying, are you guys crazy? You're going to bankrupt this poor guy. Not quite 2.5 years later, we sold one of the investors was buying another NBA team. He had put in the third most amount of money into the Warriors. 2.5 years later, when we sold his LP interest, he more than doubled his money in that short period of time. And the Warriors' $450 million investment, Forbes this last year now has them at $3.1 billion. They're going to open up the first arena in downtown San Francisco the start of next season. It's just an incredible success story, but it all started with the courage to do it. And the one thing we all know this in our business, but the one thing that drives value, it's not how many times they've been to the playoffs. It's not how good the players are. It's not how good the coach is. All of that changes. Ownership changes. Everything can change except for one thing, and that's the market.
Demographics.
You can't drop 8 million people into a market. They're either there or they're not, or 15 or 16 million in the bigger markets. So that was the bet we made with Joe, that this market is a great market financially, and it's only going to get better. And any well-run team, we never dreamed that he would do what he's done, would be very successful and worth that value. And we'll never know, because he made it go way past where we ever thought it was going to be from a basketball standpoint.
Excellent.
But you know what the worst, I'll tell you a story about this. After Joe won, my seller is very shy. Chris doesn't like media coverage, and the media was killing us. One of the lead stories was that the reason he sold it to Joe was he wanted to get even with the Warrior fans. He didn't want somebody better than him buying the team. So he wouldn't go on radio, so he asked me if I would go on the evening drive time talk shows in San Francisco. And I said that, look, I've known Joe for a long time. He's a very competitive guy. He really wanted this team. He's going to make this team very competitive. He is not going to tank this team. This team is going to be good. I got killed. Oh, let's talk to Peter from Oakland. And the guy was like, you're an idiot. This and that. You should have sold it to the other guy. Blah, blah, blah. Right. Now they've won how many championships? I'm waiting for one son of a bitch from the Bay Area to call me up and say, you know what? You were right. Just one. Just one. No. Not a single one. So I'm an idiot. They were smart, except now they have the best team in basketball. And, I don't follow professional basketball. I'm a Knicks fan.
Ouch.
I feel your pain.
No, it's true.
It doesn't seem like there are a lot of teams for sale right now. I know every now and then someone says something dumb, gets divorced or dies, but why is that?
I think you're now in a period in the last 5-6 years, all of the leagues have, baseball doesn't have an official salary cap, but it kind of works out in a way compared to because of the debt limit rules. But the NBA, NHL, and NFL, they all have salary cap rules that brought the salaries down from about 57% of the gross revenues of the league down to 50%. Well, that 7% is a huge number. And then separately, you've had these monster television deals occur. Right, exactly. And between those two driving factors, one, cash flow is a reality now for just about every team in a decent market. And franchise valuations, because of that, have soared. So, as you said, Steve, there's no reason for anybody to sell. When Sal and I, half the time you're buying or selling, it used to be because, the guy was out of money, this was going wrong, he couldn't make his debt service, there was a million financial problems, and now that's rarely, if ever, even any kind of a factor.
We're working on 4 transactions right now. They're all limited partnership sales. We're looking at potentially a control sale in Europe, but and those teams in Europe, some of those teams lose significant amount of money. It's almost like looking at what it used to be like in professional sports 20 years ago or 25 years ago in the United States, because they don't have salary caps, they spend money like crazy, they have no real strategic plans, management stinks, keep going, okay? But here, we get very few control sales, so we're doing a lot of limited partnership stuff. We do a ton of valuation work now for various reasons. And we lend money. I mean, that's what we do. But we're going to have to evolve, I think, with the business. We're going to have to figure out how to be more efficient. We're going to have to figure out new initiatives. I think one of the problems in the business is liquidity. And we're going to have to figure out a way to fix that. But we will. Well, somebody will. I'm 100 years old, so I won't be around when that happens.
Next year, Sal.
No, I'll be 100 next year. But, I mean, that's something we have to take into account when we look at how we structure our companies and where we spend money. I mean, it just is.
And the other thing I think that's going to happen is the leagues are going to have to start to evaluate some of their rules, their ownership rules. For example, it's very difficult. Well, in the NBA, you can't have a partner that's a private equity fund. There are some prior instances of publicly owned teams that was pretty much not favorably looked upon by the leagues because they like to so tightly regulate everything. But you're now getting to a point where the capital needs to underpin the valuations that are occurring are going to outdistance the wealth to pay those prices by just individuals. So I think, and the debt limits as well, as teams have become a lot more profitable. They have been increasing a little bit over the last couple of years, but nowhere the increase in the valuation versus the increase in the debt limits are totally out of whack.
Yeah, they are.
The valuations are far exceeding that pace. So there's going to be a lot of changes, I think, in the next 10 years, which, as Sal said, we have to always be thinking about and how to adapt to. And in some cases, we talk to the league, Sal does, Steve's company about some ideas that maybe you could structure things this way, or we're always poking a little bit about, could we do this one if we didn't get every private equity partner to sign? Could we get, that's part of our job to try to make that the potential capital keep up with the values.
I think we have some people who are going to be out on the job market soon. Do you want to just do a minute or two of what types of people you guys look for and what you've seen be successful in the industry? Yeah,
that's interesting. I have kind of an advantage, sort of, because I teach at the business school at Columbia University. I have since 2002. I do it every other semester, so I have 73 students who I get to interview for an entire semester, basically. And so when there are job openings for us, in the past we've probably hired half dozen of those people over time. They come into our firm, they work with us for 4 or 5 years, and then we help place them in other jobs, either in sports or private equity and other places, because it's a great business. I love it. I look forward to going to work every day, but it's not a growing business. There's a static number of teams. You have to watch your overhead. We have 8 people in our firm. How many people do you have in yours? I mean,
On and off, 4 or 5.
yeah, about
8, 9.
yeah. I mean, it's not like we're going to hire a whole mass of people. And so if I have an opening, I'll either find somebody who has been an outstanding student of mine, or we'll go through an incredibly painful interview process where we get hundreds of resumes, and these poor people that go through this thing, it's horrible. And then I get to interview the last 4. And for me, if my people tell me they're technically competent and they can really do the job, the most important thing is, when you have a small firm, is everybody's got to be a team player. They have to be able to work with everybody at the firm. It's really, really important. There are a lot of people that can crunch the numbers and can do this. This is not deconstructing Enron. But personality helps a lot, because when we're pulling together and trying to do several transactions at once, everybody's got to be able to work together for long hours. And if they can't, or somebody's going to be a pain, they're not making it. So we try to do that. But it's hard.
It is hard. Does anybody have a question before we wrap this up? Yep.
Obviously, a lot of the conversation was focused on sports teams, which, as you mentioned, has kind of a finite number of opportunities. What have any of you or the firms that you represent looked at opportunities when it comes to a growing aspect of sports being sports technology startups?
I've looked at some of the stuff in esports, and some of my people understand that business, but I want to work where I have a competitive advantage. I don't feel I have a competitive advantage in that. I just don't. I'm sure there are a whole bunch of people that can do it better, and that's not a good playing field for me.
And we're the same way. We go back a long ways. We know what we know, and then we know what we don't know. And that's sometimes knowing what you don't know is more important than what you do know.
That's true.
And the other thing I was going to say about our field, and I'd love your guys' comments on this, but it's not a growing business at all.
No.
I mean, how long is Rob and Intersports?
We've been doing it since 2006-ish.
Yeah. So I don't know of any new firms. I mean, there's in the last 10, 12 years, there's a finite number of transactions, and it is relationships, as Sal said, that you have to build. And it's hard to envision some, even somebody leaving a good bank and whatever. It's really hard. But in terms of overall sports, the thing I always tell everybody, if you're going to get in the sports business, one, when you first get in, you're going to get way, 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 way underpaid. You're lucky to find anything in sports. You're going to work twice as hard, and if you think you're going to get in there at 9 and head out at 5, you'll have a very short-term job, and sometimes it'll take 3 to 5 years to get through the clutter, because everybody thinks they want to be in sports, and then when they find out what a grind it is at the end of the day and the kind of commitment it takes, that falls out. If you survive all that, then it's a wonderful place to be. But you have to be prepared going in that it's a grind to get going.
Yeah, quickly, I agree with these guys. We have actually focused on the sports tech space a lot, less on the startup side, because for us, raising $1 million, $2 million, $3 million is hard. But we just sold a CRM company called Core, K-O-R-E, to a private equity firm. We did a fundraise for Teamworks, a mobile collaborative software company out of Durham, just in the last few months. And we're spending more and more time doing that right now. So, for us, as we do see some of the same stagnant side on the team side, it's someplace we are spending a lot of time.
Yeah, it's very interesting. I mean, some of the large investment banks, they kind of blow into the business, they do a deal, then you never see them again.
Yep.
And it's kind of like, okay, but think about how small this business is relative to what they do, right? They're doing thousands of transactions in computer technology, right? And they'll do one sports deal, and relatively speaking, that sports deal is tiny.
Right.
So it's not worth it for them, and they don't put the A team on the transactions either, which is frustrating sometimes when you're dealing with them, because they don't even know what questions to ask. And
We could spend a lot of time making fun of some of the big banks, but we'll have to save that for another time.
Too bad. I
I
like
think we're
doing that.
running,
That's
we're
one of my
running out of
favorite
time.
Look into the camera and speak up when you do that.
But thank you, too, for sharing all your stories. And Patrick, thank you. This was a great day, and thank you, everybody
awesome.
else.
Thank you.